All right, everybody, this is John. Welcome to the premium video. And just going to review kind of the SPX on a 5-minute chart. This is in advance of the class I'll be teaching tomorrow. And just kind of notice we got some key times a day here. So we got Monday, and we got Tuesday, and then of course we got today, Wednesday. And we can just kind of get a sense of what happened. And here we have the gap up in the SPX. And then you'll know we just kind of drifted down. And if we look down here at the ticks, it was pretty neutral. We did have some initial buying in the Mag 7, and that dropped off quickly. And then we just got a normal gap fill. So, I mean, this was like a 15-point move up. We filled the gap. Nothing too special. And then from there, we just kind of drifted up the rest of the day. And the main thing I want you to note is that we spent the day in between the H1 and the L1 quant pivots. This is what the markets do about 70% of the time. So this is just kind of your typical average day, no real lasting extremes. And then we go and we look at Tuesday. We had a similar situation. Okay, we had a gap up, here we came down, and here we had a gap up, and then we kind of came down and filled the gap, right? All right, so what was a little different this time around? Well, we didn't really get extreme. This is the 5-minute, by the way. On the 2-minute, we got more extreme, and we'll look at that too. We didn't get quite extreme here, but this is pretty heavy. We did get major selling here in the Mag 7, so that was kind of the main tell. And then you can see that the Momo went yellow here and just boom, 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 boom. But while 70% of the time we stay within the first quant pivots, then, although you can't see the second one, then the rest of the time we generally stay at least, the other 30%, well, the other 25% of the time, we actually are then contained within the second level. And in this case, we came all the way down there and then stopped, and we just traded sideways the rest of the day. And we had heavy selling in the Mag 7 repeatedly, and then some heavy selling here. Nothing like walk down or anything like that. And what you need is if we're going to actually go through this, that's a walk down or a walk up day. And we'll take a look at one of those real quick too. And then for today, a little bit of the opposite. We kind of gapped up, we kind of filled the gap, and we had a lot of buying come in on the Mag 7. And when that happened, we just kind of took off, and then from there, kind of walked up higher. Now, if we switch this, actually, let me switch this real quick. All right, so now if you look at these two, notice we got 5-minute SPX here, and then we got 5-minute NDX here. And then if you look at the ticks here, they're different. So here, while the SPX sold off a lot, you can see that the NYSE tick really didn't do much, and there was certainly some action in the Mag 7. But then look at the tick indicator here. It's based on the NDX. So the real selling was in tech. And of course, if tech's going to go down, it's going to take the S&P down with it. So here you got the flag early on the NASDAQ. And that's why you got to watch kind of these together, because it's not all about the NYSE, right? And then, so when you get this, I mean, essentially you're going to get selling, and then when you get these together, you're going to get massive selling. And typically what I've found is on something like this, it will take you, it'll take you to that second tier. We only get to this level like 10% of the time. And then if it continues like this, we'll just keep going, and you get a walk down day. Initially, though, that's what you look for as a target. And then today, it was a little bit of the opposite. We kind of gapped up, and then you can see we got essentially mostly first tier buying. We got a little bit of that extra buying right there on top of it. And you can see, again, a lot of this was driven by the NASDAQ, especially into the close. You can see some more buying there into the close. All right, that all being said, if we're looking at setups from a swing perspective, I like Uber here because, first of all, the transportation sector, IYT, has a squeeze in itself. And now you've got Uber within the transportation sector, also within a squeeze. And not necessarily expecting these huge crazy moves we're seeing, but we're trying to pick it up at the 21 EMA and then simply flip it out at +2 ATR. You can make a nice living doing that. Let's go ahead and look at some of the Mag 7 today. And of course, you have this beautiful rounded bottom and NVIDIA just sitting under all-time highs. And of course, you've seen the news with AMD. And gapped up, came down, and then huge move today. And just when you see stuff like this, it's gonna light fire to almost everything else that's happening out there as well. Meta has struggled, and this is one where I wouldn't say that this is we're looking for this to go down. I'm not looking for that to go down further. We did catch a nice move to the downside here, but essentially we're here now at support, and can we at least rally back to the 21 EMA, which is around 738? That's possible. Not my favorite trade by any stretch. If you look at Tesla here, Tesla, anytime it comes down to the 21 EMA, it's been bouncing pretty good. There's not necessarily, there's a one dot black squeeze here, and this thing has, basically rallied 100 points. And so I'm looking for more volatile back and forth. I am absolutely fine buying any pullbacks to the 21 EMA. Likely at this point as I'm watching this, if we do get up to plus 2 ATR, just flipping it out and then looking to reload. Obviously keeping an eye on the idea that we could break out here and make new highs, but I'd want to see more kind of red dot squeezes building up on the 2 hour, 4 hour, and ideally the daily for that to happen. There's a nice squeeze here on IWM, and it's been building up. We don't have the red dots yet. That's not necessarily a deal killer. I do like to see some of those OG kind of red dots, but it just kind of continues to paint the path of least resistance as lower. Higher, keyword there. UNH, this is one that we picked up. It's just, this is kind of a unique thing. Honey Badger, it's just drifting up. It got overclocked to the downside, and now it's kind of working its way and just kind of drifting its way to the upside. Micron Technologies joining the semiconductor party. The other interesting thing here is travel is a little bit of a buzzkill here, and Booking.com is down about $500 a share in 3 trading days, all the way to its 200 SMA. And this shows you just kind of the impact of what's happening, at least right now, in the travel sector. Some of it, of course, you've got a lot of flight delays with the FAA. People quote unquote calling in sick since the government's kind of shut down at the moment. So it'll be interesting to see. I know I've got a flight coming up next week for a couple days, but it's funny, my wife and I were talking about it today. And the last couple flights we've done, the airports have been packed, the flights have been jammed. It hasn't necessarily been that fun. And we're thinking for Christmas, let's just find somewhere we can drive. Road trips are fine too. And then probably have a much better chance of not catching a cold too. Apple consolidating near its all-time high. And I just want to see kind of exactly where this is. Will likely, this is one of those things where I've seen this before. I think that's pretty close. Where we can consolidate below it for a little bit, but then when it goes, it just goes. You can see, of course, its resistance right now, but it is gearing up. We don't necessarily have any daily squeezes, but we do have a really good looking 4-hour squeeze, and I think that's enough to kind of get this going. This is a beautiful 4-hour squeeze, and what's great about this is you can see that while this momentum has been sliding, the price has been going up. I mean, that's incredibly bullish. It just shows that it's like the momentum's catching its breath, and then when this turns higher, it kind of allows this to pop. So certainly keeping a close eye on that. AVGO here has a little bit of a different squeeze. So you've got moving averages are kind of sloppy. We had obviously a great upside move today, but what I like about what's happening here is you got kind of this boomerang. And when this happens, oftentimes that's kind of the initial turn where you'll see momentum kind of come back up to this level and price just goes. So while it's not the cleanest play, I do like that there's a ready, there's a buy arrow, all the kind of fun things there. And this is something, looking to go back to plus 3 ATR. So another one there. And we have earnings season kicking off again pretty soon with Netflix. I believe this is coming up. It's not showing up on here yet. I believe, though, it's coming up. It must be maybe it's at the end of October. So we'll see reporting and things like that, too. Just kind of keep an eye out on that for potential earnings play. And then let's look at some of the key markets here. So this is Bitcoin. Bitcoin, nice move, obviously, from 108,000 to new all-time highs. And when you get momentum like this, you see that the 5-period EMA starts acting as support. And so this is, it's just very bullish for risk assets in general. And then while the stock indexes were strong today, you saw some action, some stocks selling off, but we just got walk-up action here in the SPX. And by the way, this looks a little compact because I switched this out to the 8 EMA because we just weren't getting any tests of the 21 EMA, so that's why that looks a little bit more compact. And then, of course, NASDAQ futures here continue to drift up after hours as well. And then last but not least, I want to take a look at, I'm keeping a close eye. These are the 10-year interest rates. And I do think if we can take out this low and stay below it, we'll actually see a little bit of a kicker in the residential real estate market, which has been kind of dead. Every asset's going up except residential real estate at this point. But residential real estate's also a little bit like Oracle, meaning that you had this explosion, 21, 22, 23, where, up 50%, which is unreal for real estate, and now it's got to kind of excess some of that drag off. And, it needs to digest all that. And, probably won't be taking out those highs anytime soon, but just kind of see things, if we can get those rates back under 4% on the 10-year, start to turn up just a smidge. All right. That's what I got. Tomorrow is Thursday. You'll see a link for my class tomorrow where we'll be talking about those tick tools, which should be a lot of fun. You guys and gals have a good one, and see you on the other side.